Hey guys, it is Julie here with JT Wealth, and today we're discussing popular dividend stock ZIM Shipping. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're talking about the ZIM stock. Now a while ago I did a short video on this just surrounding some price changes around the dividend date, and it got a lot of feedback. Even on other dividend videos, a lot of people say, why would you buy anything else but ZIM? Their dividend yield is insane, and that is very true. So today I want to take time to take a closer look at the stock. Now I'm not here to ever tell you to buy or sell any specific stock. I just want to share updates on what's going on so you can be making your decision after looking at all of the different angles. So today we're going to take a look at the ZIM stock, what's been happening with it recently, and that infamous dividend yield, and what we can maybe anticipate for the year looking forward. So let's jump right into things. ZIM Integrated Shipping is currently priced at $17 per share. Now they are down 46% this past year, but have been seeing gains in recent months. Keep in mind that this stock just came onto the market back in 2021, and it's had some pretty big movement in the last couple of years. The ZIM stock has quickly become well known for their very handsome dividend, with dividend yield of over 100%. Their most recent quarterly dividend was $6.40 per share, which would give you a current dividend yield of 156%, which is insane. What is impressive though is we do have a healthy payout ratio of 44%. So at $17 per share, that $6.40 dividend is immediately going to give you some really healthy returns, over 35%. And at that rate, it would only take you a few quarters to essentially get 100% on your money back. This, of course, assumes that the stock doesn't decline in value. Hopefully it would go up over time, but also that dividend doesn't decrease. Now, I also want to take a look at their most recent quarterly earnings report, where they also gave us some outlook for 2023. Their latest earnings report came out last month on March 13th, and they did have a really solid report. Their earnings per share of $3.44 came out more than $1 ahead of expectations. Their revenue came in at $12.6 billion, which was up 17%, and adjusted EBITDA of $7.5 billion. But the big thing down here is when we look at that future growth. So for 2023, they're now guiding for adjusted EBITDA between $1.8 to $2.2 billion. So that is a significant drop. That's about a quarter of the EBITDA they had in 2022. And this can be expected to affect their dividend, as their dividend policy is based on returning a percentage of their profits. Their CFO in their earnings call said that we are entering this unpredictable time with a strong balance sheet, a significant cash balance of $4.6 billion, and zero net leverage, and that they do remain committed to returning capital to shareholders under their current dividend policy of returning 30 to 50% of their annual net income. So pretty straightforward that if that net income declines, the dividend amount is going to as well. Some of the reasoning behind that big drop in future guidance is looking at some of the numbers here. Now, for the fiscal year 2022, they had freight rates of $32.40, which was up 16% year over year. But in this most recent quarter, we saw a sharp decline to just above $2,100, which was a 42% decline. Of course, things look great here with their cash flow from operations and free cash flow, which was able to fund that massive dividend. But when we look forward here, we can see that the average freight rates are anticipated to be significantly lower. And while they expect carried volume to be higher, bunker rates will also be slightly lower as well. Their CFO also made comments regarding supply and demand around the shipping industry. They said that the backdrop that they are providing guidance against today is extremely challenging. The supply-demand imbalance points to oversupply in 23 and 2024. Demand is soft, and as a result, congestion in U.S. ports and elsewhere has been gone. These factors, among others, are causing freight rates to continue sliding, though at a slower pace as compared to the fall of 2022. They did add that on the demand side, we believe that in 2023, we will see a return to more normal demand pattern, with demand stronger in the second half of the year, especially given the current weak demand. So all that to say, there could be choppy waters ahead here in the first half of 2023 as demand is weak and freight rates continue to drop. Now, ZIM has become famous for their massive dividend, but of course the company's only been on the market for a couple of years, so we don't have a huge track record to look at. But as we said before, we know that that dividend is very much tied to their net income, and we've seen it vary over this past year. They've typically been paying 20 to 30% of their net income and then doing catch-ups throughout the year when they know they've made a certain amount. Let's say that they do cut their dividend, which can kind of be expected for this coming year. Even if it was a quarter of the current amount, you would still have a very attractive double-digit dividend yield, just not a three-digit yield, which is quite all right. But the big thing is, if you think the value of the stock is going to maintain the same, go up from here or fall. Taking a look at Wall Street analysts, they don't seem extremely confident in ZIM's near-term growth potential, as it does come in as a moderate sell with 3 hold ratings and 2 sells. Taking a look at our list of price targets down here, the most recent came in last week. Now we do have several hold ratings that still have an upside potential, some as high as 40%, and then a couple sell ratings with some downside. Of course, the shipping industry is known to be quite cyclical as well, so it really comes down to your investment time frame, whether you're just looking to make a quick buck off the dividend, or if you're more of a patient, long-term investor that is willing to stick around for years and see this grow. Many see the ZIM stock as having a good valuation at current prices, and even with a big decline in freight rates, the company is still expected to be profitable next year. So I think those are most of the main points that I wanted to cover today, just that this coming year we can definitely expect some lower revenue, which will translate to a lower dividend. And while the stock has been settled down now for a little bit, we will see how investors react when those earnings reports coming out showing those lower numbers. Now you guys know I always appreciate hearing from you, so let me know your thoughts on the ZIM stock in the comments down below. Have you been collecting that sweet dividend this past year? And what are your expectations for the future from this stock? Let me know your thoughts. Of course, guys, these videos are never a suggestion to buy or sell any specific stock, just helping you take a look at some different pieces of information and hopefully provide a little bit of entertainment. If you made it to the end, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Thanks for watching and have a great day.